And ladies and gentlemen, we should be live. I'm going to wait for the technology to catch up here and we get it popping up on the screen. It is Sunday, April 11th, 2021. Welcome to the Cowboy Metal segment of the program. It is so named because we are broadcasting from the great state of Texas and we have our Cowboys down here. Hope you guys are having a good time and having a good weekend. Hello to all of my European and UK and Asian subscribers. We do this on Sunday afternoon so you guys can participate and you can join in our American counterparts. We've got a lot to talk about today. The gold is popping. We're going to talk about inflation. We're going to go over silver. And what I'm going to do today is I'm going to go over the metals in a little bit more detail than what we're used to going over. So stay tuned for that. And I'm going to look at the viewer activity. There we go. All right, we are ready to go. So I'll go ahead and get into the share screen. A lot is happening in the metals. We want to talk about that. I haven't gone over the metals and the metals charts as much lately. I wanted to take a moment and do that for you guys today to talk about what's happening. I also have some tidbits from a conversation with my good friend John Adams from Adams Economics. He's going to be on the program tomorrow night. Stay tuned for that premiere. He had some very interesting comments on what's going to happen in silver in the upcoming big trading month. We'll talk about that into detail, but we're going to focus a little bit on gold today because gold is really where it's at in terms of when we get inflation, which metal is really going to pop first. Gold usually pops before silver. And you know you have a big precious metals rally when you start to get inflation and you start to see some movement in gold. We've got the movement in the physical gold, meaning people are positioning in the metals before we see it happen in the contract. So before we see it happen in the price. And we're going to go over those logistics as we get into the program today. So I'm seeing people say we have no sound. Let me turn up my sound and make sure I've got it on my end because I'm getting sound from the microphone. Is live. I'm getting green. Let's go ahead and troubleshoot that here real quick, guys. Yeah, we're getting sound. Yeah. All right, so you guys not getting sound?
90% of people are living in a delusion. America is in crisis.
As I get the ad. No, we're getting sound, guys. I'm getting it on my stream right over here. So if you're not getting it, check your mics. But we're getting it here. I'm getting it back through the stream on my other computer. So we should be good to go. We'll jump right in now that we've troubleshot the connection. So we're going to get right into gold here. Give me just a moment to get all my meeting control set up. So gold has been really interesting of late. We've talked a lot since last July about what goes on in the COMEX. And before I get into what's going on in the COMEX, I want to talk to you about what is spot price. How do we determine spot price? Because that's something that's simple, but seems to escape people because it's confusing. Because in the Western market, you basically have two main markets. You have the COMEX, which is based in New York and Chicago, the four different trading markets that we have, and then we have London. And so between those two is where we get the spot price. And essentially spot price, it starts with the LBMA fix. There are 2 fixes per day. And actually, if you want to see those fixes, we're going to go to my website. I'm going to show you how to find that. If you go down to my website, go all the way down to the research section right here. And in research section, we have the gold prices today. So it's got the fixes, the AM and PM fix, and I've got it priced out in US dollars, pounds, and euros. And I've got that for gold and I've got that for silver. So 2 times a day, London market will fix the price. And then the futures trading throughout the day will adjust that price. So between the 2 markets, you get your actual spot price there. And it's a little bit confusing, but that's how they do it. And the way that they fix the London markets is they have phone calls and conversations between some of the big participants there. And they say, these are the targets we're looking at based upon the trades that we're seeing. Because it's an over-the-counter market, because there's a lot of private trading going on, not everything is public. They have to do it that way to kind of set the prices for what they're seeing throughout the day. And then in between those fixed times, you'll have the COMEX and the futures trading affecting that spot price. So that when you go to your dealer or you log online to one of your bullion dealers, that's how you figure out what the spot price is. I wanted to clear that up a little bit because there've been a lot of questions about that lately. And that's kind of how spot price is determined. It's based upon the paper trades, the unallocated gold market in London and the futures trades on the COMEX. All right. So getting into gold here, we have the gold volume chart. Now you see that volumes died down since the end of March, April. We have a decent amount of futures trading, but not the exorbitant amount we had in February and March. And so gold prices kind of drifted a little bit. I'll get into that chart here in a moment, but I wanted to focus on where we're going. We're seeing people come out of the April, May contracts and get into June. So June's the heavily traded one. You see that it's got the most open interest at 377,000 contracts. I wanted to pay particular focus to a couple of things. If you look at delivery, the actual physical deliveries on the April contract, of course, you can only deliver on the current contract. We do have a healthy amount here, but the exposure to EFP, which is where you take your COMEX exposure in the US and move it over to the unallocated London market, whether you're just looking for price exposure or actually taking deliveries, is much higher. So we've seen these EFPs, or exchange for physicals, from the US market to the London market, very, very high since last year, and it has not abated. In fact, it's gotten stronger. And what that tells me is there's not enough actual physical liquidity on the COMEX in gold to satisfy people who are trying to get exposure through the futures market. So they're going over to London to get that exposure. And that means that maybe there's a little bit more physical demand than the COMEX can handle right now. And we've seen that trend, especially in 2021. It started late last year, actually started summer last year, ramped up late last year, and it's been really strong the first quarter, January, February, March. So that is the trend. This is Friday's data. I'm gonna drop back down to Thursday's data here. You'll see the numbers change. Again, 66 deliveries there in the April contract, 2,395. On the June contract are going over to London. So that's people getting exposure in the unallocated London market. I'm going to switch days to Wednesday. Same thing, 456 deliveries, and then 3158 on the EFP going over to London. We'll go back down to the 6th of April. That was last Tuesday. 515 actual deliveries on the April contract, 2644 EFP over to London. And on Monday, 832 deliveries. And then we only had 718 EFP. So a little bit higher deliveries locally than there were on the London market. I want to get into the actual settlements for just a moment here as well. You can see as of Friday's data, we're settling about 1744.80. When you see these settlements, the biggest nearest month, which is obviously June, is going to be what influences the current spot price. And you'll see the spot price only a couple of bucks off of what that settles at, because they're trying to take the futures deliveries in COMEX and match them up with London, and you kind of get a little bit of float between the two. There is a price arbitrage opportunity between London and COMEX, and there's also price arbitrage opportunity for traders speculating between London, the US market, and Asia as well, because the prices will be slightly off. And if you're trading a lot of volume of paper, you can make a little bit of money that way. And that's why prices will be off of each other every once in a while. And of course, we know if there's a big price difference between London and COMEX, that means there's different demand between the two markets, and that's a bigger price arbitrage opportunity. A lot of times it can also signal shortages in one of the two markets. I'm getting back to a little bit of basics on how all of this works on purpose, because I haven't covered this in a while. We've been having more interviews on the channel and doing other things, that I wanted to take a moment and just talk about the basics and get back to basics. So that's what we're seeing with gold. And I'm going to get into the gold deliveries here in a moment, but I'm going to jump right on over to the silver futures, and we're going to look at volume there. We have a pretty healthy volume of trading going on silver futures. Most of it is in the futures, not in the options. There's a baby bit amount of the options. If you look at gold, gold always has a little bit more of the options trade, or at least lately, it's got more of this light blue, the options trade, than silver. Silver's mostly futures. And if we look at what's going on, essentially, we've got, again, 121 deliveries on the April contract. April's not a huge contract for silver. There's only 400 open interest. So about a little more than a quarter of that, almost a third of that, were deliveries. And then, of course, you have EFP's 360. So same thing we saw in gold, a little bit more moving over to the London market. Here's a bigger one on Thursday's data. As I do that, select that from the drop down, we get only 4 deliveries, but 1,099 going to London. So people are hunting in that unallocated gold market for exposure, for liquidity to the physical. They're moving from COMEX to London. Again, that means there's a lot of US demand, and some of that is spilling over overseas into the other market. One delivery here, 535 EFP. And I'm just going to sum these 5 deliveries from the Tuesday data last week, 532 EFPs, and then on Monday, 79 and 301. So again, the trend is more actual physical exposures going to London versus what we have on the actual COMEX. Now we're going to get into the charts. Let's start with gold. So gold here, you can see we started covering this in detail back last July when we were here, and we had that nice little, July here, and that nice little run up. Now we've had this very steady sideways pattern. We had a breakout at the end of the year. That was right during and after the elections, when all of that stuff was going, the uncertainty about who is going to be called and what happened in the Capitol and all that stuff. gold played its role as a potential crisis hedge and popped up. Once that all started to get settled a little bit, it came back down. So we're now in a downward trading range, but we've got a little bit of a flag pattern here. Flag patterns are really consolidation patterns. And when they're flags to the downside like this with a very steady base and then a downward shaping flag there, it's usually a consolidation pattern and usually somewhat bullish. So this overall is bullish. And if I'll tell you why it's bullish, if we go back out to the long-term chart, I'm going to go to the 12-year chart. You see the cup and handle that I have been talking about ad nauseum now for about 8 or 9 months. Of course, I've covered it, dating back 3 or 4 years. But really, once this formed, once we had that pop last year, then we had the formation of the cup. Then it was just waiting for the handle. And so here's the cup, here's the handle where we're tracing back down. We trace back into the high 1600s and we pop back up into the 1700s. That's the handle formation. That is an ultra bullish signal, especially over the time frame that we're looking at. When you have this retracement, it's a consolidation. You see all this volume here on the chart is the consolidation. That's consolidation waiting for the next price move. Now, what's going to pop gold next? Well, we're going to talk about that here in a moment when I get to inflation. We're also going to talk about Credit Suisse for a moment and a potential black swan in the banking system that people probably didn't see. That could be what kicks off the next leg of the big bull market in gold. But I want to go back and show you one more thing on the shorter term chart. What happened with gold was we pierced back down through the 50 and 200-day moving average. This is back in February of this year. So when it started to trace, you see this flag pattern here, this consolidation pattern as the top is coming down, but the base is staying the same. So you have an even base and the top coming down. That is a short-term consolidation pattern. It pops through the 50 and 200-day moving averages. You can see the red and the blue squiggly lines here. Blue is the 50-day, red is the 200-day. But then gold came up beginning in April and tested that 50-day moving average, but it didn't go through. So we're still consolidating right now. It probably is going to test that 50-day moving average a couple of times. And then eventually, if it pops through, then that's a sign that we could be into the next bull phase. But continue to follow this cup and handle pattern. It's one of the easiest patterns to follow. It's one of the most consistent patterns, which is why I talk about it all the time. You've got this flag here. It's a bull flag. You've got the cup and handle. So we have a long range and a short range signal telling us we're consolidating for another move up. And of course, the fundamentals with the negative interest rates, with the rising inflation, with the trouble with the 10-year bonds, which we could get to here in a moment, are all things that are telling us that we're going to have another gold bull market. We just have to be patient and ride it out. It's going to come. No worries there. Silver is a little bit of a different story. Silver has stayed stronger relative to gold lately. And so I think that's a good sign because, and the reason is because silver is an industrial metal. We need it. We had the resumption of the economies from the shutdowns last year. Silver is going to be big in the space economy. I think silver is a strategic metal. They don't want silver price to rise too much because it's used in so many places in the economy. They got to keep it down, but they need to let silver go up enough to get the producers to produce more because we're sitting in a supply cliff. The proven and probable ounces that we have are not enough to meet the economic needs and the growth in the silver demand going forward. If you remember a video I did recently, we talked about the additional 100 million ounces the Silver Institute is predicting that we're going to need for this year, 2021. That would put us up over 1 billion ounces of demand. It's very, very high demand. So the powers that be that manage the market have to make sure that we have a high enough silver prices to make it profitable for people to do that. So it's got to stay above 20. That's why 20 is my absolute downside target. They cannot allow it to go below 20 or that's demand destruction. People will start shutting down mines. It will kill silver production at a time when the economies need it the most. They're not going to allow that. But they don't want it to get above 30 because if it gets above 30, that signals oncoming inflation in a bull market in the precious metals. And it makes silver more expensive when they need it cheaply. And so that's the range we're trading in. Right now, it's trading somewhere around the 25-33 mark. Again, another bull flag, a really light bull flag forming here, a consistent base with a shrinking top. That's a consolidation pattern. And usually when it gets down to the end of that flag, eventually it will pop back up. Silver has popped back up through its 200-day moving average, this red squiggly line as you see here. It has not quite challenged the 50-day. It will have to break through this bull flag formation and challenge the 50. So this is your first resistance point, about mid 25s. Your second resistance point is the lower 26s. 26.29 is the current price there on the 50-day moving average. When it breaks through both, you're back in a silver bull market. We're going to blow out the chart here and go to a little bit longer view on the silver chart to see where we are. Silver doesn't really have a cup and handle. It did have this big long consolidation pattern. Then the breakout when the pandemic hit and the shortages in the supply. Then you had the drawdown and the shortages of supply became more obvious. And then you had this big uptick right here when you had the silver squeeze began at the end of January. Then we've had a solid sort of a consolidation pattern, much like we've had in gold, although a smaller consolidation pattern, but silver is really staying in that range. This is the range trade between 30 and 22 or 20 in that range. That's the range we've been sitting in since last July. We've been bouncing up and down between that range, and that's the controlled price range. And I do say that it is controlled because 30 is too expensive for them for industrial purposes, and 20 is too cheap for them to get the silver out of the ground to entice the miners to think about which mines are going to develop in the next 2 to 3 years to keep that supply coming. Okay. When you see silver break 30, that means people are getting into silver for the crisis investment, not just the industrial demand, but for the crisis investment. And that price is going to rise. And when I say people, I don't mean the retail market right now that we're seeing. I mean the big industrials. I mean the big dudes. When the big dudes get in to silver as a crisis hedge, you'll see it pop this red 30 line. That's why this line is red. Red means this is the tachometer line for silver. This is the one we really want to pay attention to, because we get past that red line, the engine's revving in silver, and it could keep going from there. All right, I'm going to pop back out of the screen share here for a moment. I've given you guys a broad overview of what's happened in gold and silver here for the month of April, and looking back a little bit into March, and then we blew out the chart on a longer time frame, and I showed you what's going on there. I gave you some technical analysis so you guys will see what's going on. And that basically gives us the picture. I'm going to get into deliveries in a minute, and then I'm going to get into the really interesting conversation I had with John Adams Economics, of where he thinks silver is coming in the upcoming big month that we think we're going to see. We'll get into that in a moment. I wanted to see here if we got anything going on in the chat, so I'll pop over to my other computer. And I do see that we have a donation from Hume12345561. He says, brilliant as always. Thank you, Hume, so much. I appreciate that donation. You guys that do the super chats, it really helps the channel. Just a few bucks. If you have them, I do. It really helps. Of course, we like to answer questions from everybody, but I do appreciate the super chats and the support. Thank you so much, Hume. And we are going to get into the rest of the chat and see what else we have here. See if we have some questions. I have a comment from Mutant Ryef. The 13th Amendment freed the slaves and the 16th Amendment enslaved everyone. Plus, you can't renounce your citizenship without paying an exit tax. That's true. It's very interesting about the 16th Amendment. That's the tax amendment. And the way that it was written makes it appear as though it allows an income tax and other things like property taxes. But it doesn't. There are no less than 8 Supreme Court cases which said that the 16th Amendment does not infer new capabilities upon the government to issue taxes such as income tax. 8 Supreme Court cases. As soon as the 16th Amendment came out, people started suing. You had corporates and people suing. The Supreme Court ruled 8 times. The Supreme Court does not go back and hear tax cases anymore because of that precedence, because they have 8 cases, and they said they're not gonna hear income tax cases anymore. And people are like, it's a conspiracy. The Supreme Court won't hear income tax cases to repeal the income tax. Well, no, the Supreme Court's already had the 8 cases. It's just people don't know about them. And I've talked about this before. I'm not going to go too deep into the whole income tax thing, but the 16th Amendment, according to the Supreme Court, the highest law of the land, says that the 16th Amendment does not confer the ability of the government to infer any new taxes not specifically granted in the U.S. Constitution. Really, what it was doing was settling a tax case in which there was the way that the tax provisions were written in the Constitution. There are 2 types. And between the 2 types, there was a little bit of a loophole between the 2 types. And there was a disagreement that came up in that loophole. And what happens was they had to settle that disagreement between direct and indirect taxes. That's what the 16th Amendment is for. That's what the Supreme Court has said. But I'm not going to go any further into that because that's really for another show. I could do a whole couple of hours on that by itself, but I'll leave that as it is. I'll let you guys research that. Go look at the Supreme Court and the rulings on the 16th Amendment and income taxes. Little hint for you. I'm just going to drop that for you. Ooh, wow. Big donation from Elad B, $24.99. Thank you, Elad, so much. I don't know if it was my comments on the 16th Amendment, but I do appreciate the support. I don't see, Elad, a question there, so I will pay attention to the chat. If you have a question, I'll pay attention, try to get that answer for you. Thank you so much for the donation. It really does help. All right, let's pop back into the chat and see what else we can see on everything in the chat. One-Eyed Drock, $10. Great work. Appreciate your research from LKE. Thank you so much. One-Eyed Rack. I don't know what that is, but I'll look up that reference later on. I'm sure there's a reason why you're using that as your nick, but appreciate the $10 contribution. Let's see what else we've got. I'm looking for questions. I see a question from one user to another, not to me. Hi, Rob. This is from Anders A. Hi, Rob. Do you agree with Peter's Schiff that oil is a good buy now in addition to PMs? I'm glad you asked that question because I'm going to get into energy inflation here in a moment. I do think oil is a good buy. I think any type of constantly used energy from oil, natural gas, uranium right now is huge, potentially huge. Any type of energy commodity that's commonly used, coal, natural gas, is a good investment right now because you're going to see the inflation in energy prices, which means that demand has come back as the economy's open. We'll talk about that. I do think the entire energy sector is going to be doing very well. Prices are already up. They're signaling oncoming inflation. I'll explain that here in a moment. Hope that answers your question. Let's see if we have any others real quick. And I'm going to get back to the presentation, guys. Lots of comments in here. Sound is fine. Thank you. Who is dumb enough to put gold into a safe deposit box in California? You know what? That's not limited to California, by the way. I would not put my gold into a safe deposit box because they could confiscate it. Now, there are laws, and you look these up for yourself. Please, here comes the disclaimer. Not your financial advisor. Please check everything that I say. Don't trade off of anything that I say. Don't consider this financial advice. I'm not a registered financial advisor. Do your own due diligence. Talk to your own registered financial advisor. But that being said, my understanding of the laws as I've seen them and done my own research is that if you stick your money in a safe deposit box, they can confiscate it. In fact, anything that you put in a safe deposit box, they can confiscate it. And there are cases published in the mainstream media of where this has happened before. So be careful of using those safe deposit boxes. I think information around, what I would use a safe deposit box for is probably backups of documents, but I'd put them in electronic encrypted form so they couldn't be broken. But I wouldn't put anything of physical value where somebody could take it that's someone anonymous like cash or gold and then steal it from you. I mean, if somebody steals a USB drive in which I've got, triple encrypted documents on there like my will and testament, I really don't care. I mean, it's not going to hurt me in any which way because the will and testament are going to be public anyway. Stuff like that I would feel okay with. And then I'd have a backup in another location too. Personally, I wouldn't put anything that's immediately spendable or has immediate value like jewelry or money or gold or silver, anything like that in a safe deposit box. I'd rather find a good depository and use that. Somebody did ask a question on bonds. I'm going to find that question and come back up to it. Nicholas Stark says, hi, Rob. Why 10-year bond is almost negatively correlated with gold? Why people still dump gold when the 10-year bond rising? Essentially, when the bond rises, I did a video several months ago where I looked at 700 years of interest rates. Over 700 years, interest rates overall have fallen with some exceptions, some short-term exceptions. And there's reasons for that. I don't want to get into that during the video. But when that interest rate pops up, people see it potentially as a signal of trouble in the bond market. And so they'll go to a crisis investment like gold or oncoming inflation. So they go to an inflation protected investment like gold. They get exposure to gold to offset that risk of bonds. Also, when the yield rises, it lowers the prices of bonds. The price and the yield of bonds go opposite. So let's say you bought a bond and you got 1%. The percent goes up to 1.6. That yield is 60% higher on the newly issued bond. That means you have to drop the value of your current bond by that same amount to attract a buyer. It makes your bond that you're holding less attractive. Now you still get that coupon, you still get that percent, but if you want to sell it to get the 1.6%, you got to take that loss. And that's why a lot of people will move over to some other investments when you have a rising yield on bonds. That would be the existing people in bonds. Of course, most people aren't doing that. A lot of people will hold bonds long-term, but that's what happens in the market when that happens. So good question. I'm going to come back to questions here in a moment. We're going to get back, guys, to the share screen because I've got a lot more to cover. And we're already about 25 minutes into this. So I didn't get done with gold and silver. Let's go back to gold and silver here for a moment. We did go over the charts. That gives you the chart view. Let's go over to the metal issues. So I'm noticing something really interesting with the delivery. We're going to get into the month-to-date delivery notices. As you can see in gold, we had an absolute smash of deliveries on the first notice date. Now, remember, the first notice date is 2 business days before the first business day in April, meaning 2 business days before the current month, you can signal your notice to take delivery. It gives you a little bit of a head start. So before the 1st of April, you can, in March, 2 business days before that first trading day, depending on the weekend and where that business trading day falls, you can signal your intent to take delivery. And you do this every delivery month. So 16,868 contracts of 100-ounce gold on the first day, followed up by 31.93. And overall, we're sitting at 21,991. That is a punch. That is a lot of gold being delivered on the COMEX, a lot. And when you go back to the volume and you look at the EFPs, if you add the EFPs, 48.19, and you add the deliveries, 21,991. Now hold on a second. This 48.19 is one day. It's not cumulative because they don't print EFPs cumulative. So you have to literally go every day and look at it and add it up in your mind. But I'm noticing a pattern. People will come earliest in the month and get as many deliveries as they can, and then deliveries start falling off. Why? Because there's probably less gold available and they're trying to settle in cash. And that forces people to go over here and go to the London market, which is this EFP mechanism, exchange for physical. If you look this up on the COMEX website, that's where they take the futures position. They're not getting the gold, the direct physical exposure or the direct price exposure on the COMEX. So they go over to London to OTC market and put their bid in there to get metal out of there. Now, maybe it's short term and they just want the price derivative exposure and they're hedging or arbitraging the price between COMEX and London. But I think increasingly, when you look at the deliveries, they're trying to get physical. So you've got so much physical here, and then they're trying to pop it over to London and get so much physical here. And you're looking at 48.19 on a day. And if you go back and look at history, every day, 23.95 on Thursday, on Wednesday, 31.58. I actually think the EFPs, in fact, I know the last couple of months, the exchange for physical, meaning people popping from the US over to London to get that exposure to the metal, the physical metal, has been higher than the overall deliveries on COMEX. That tells me they're shunting exposure over to London because they may not have it on COMEX. So whatever they tell you they have on COMEX is probably not correct. Anyway, that's a sign. Let's go down and look at silver. We're going to look at silver, 5,000 silver futures. It popped a little bit at, 1693. We're at 2560 for the month. If you go back and look at the EFPs, let's go back and look at EFPs. We'll start with the most recent data. EFPs of 360, EFPs of 199, EFPs of 535. So the EFPs are also higher in silver than the actual physical deliveries when you add it all up, especially by the end of the month. So again, COMEX can't handle all the demand for physical exposure. It's popping over to London. That tells you there are shortages. I don't care what the inventory numbers say. There are shortages. That's what that tells you. The micro silver futures had a nice little delivery too. So even the micro silvers, people are getting involved in the micro silver futures, the smaller silver contracts. So lots of deliveries, lots and lots of deliveries. We go back and look at gold volume, lots of deliveries in April. We had a fair amount. April was the next big delivery month. Now it's moved over to June. So I think people have gotten most of the deliveries and they're going to start doing the EFP in June and get ahead of the game. That's the other thing. They use the futures market to get ahead of the game and start front running physical gold exposure on June by going over to London because you've run out of capacity for deliveries on the COMEX. Okay, that's why EFP exists. It exists to shunt off current delivery demand to a futures month in London. It gives you a couple of months for London to get that gold, and it keeps the crisis on COMEX down because they don't have it to deliver. I kind of figured this scheme out, and it happens in both gold and silver. I wanted to go over to the year-to-date delivery notices and just see where we are in terms of January 1 to now, every month on gold and silver deliveries. So here's gold, and you get, who's delivering what on a given month. You've got issued 8,900 by Goldman Sachs, stop 5224. And you can see which depositories is stopping and issuing the most and who, net, who's bleeding the gold. But what's more interesting to me is go down to the bottom. You see the tabulated numbers, this right here. So this is December. So in December, we had 30,000 contracts of gold delivered. Then 2,000, and it tends to alternate because you have about 6 big delivery months in a year in both gold and silver. Some people say 5 in silver. I've noticed 6. So it's about half of the time. So the pattern is 1 month is light, 1 month is heavy. 1 month is light, 1 month is heavy because you don't have big deliveries every month. So this is the pattern we're saying. So light in January, very heavy in February, 36,466, a little bit lighter in March, although still almost 10,000. And then already in the first 10-ish days of delivery for the April contract, we're already at 21,991. So there's a chance we could break through the February number. That's pretty darn big in gold. Now let's go down to silver and see what we can find. I'm gonna go down to silver. It takes me a minute to scroll here. Got to go through palladium and platinum and all that stuff. Excuse me. Until we get to silver. Here's COMEX 5,000 silver, 5,000 ounce silver, and same pattern, heavy deliveries in December, a little bit lighter in January, not super heavy in February, but March. When you started to see that silver squeeze, you see this big breakout in 5,000 ounce silver. And again, the following month, even though April's not supposed to be a big delivery month in silver, why? Because it's not where the open interest is. It's in May. The open interest is in May, not April. But in silver, we're still having, fairly big deliveries in April. Not huge deliveries, but fairly big. And when you add this delivery number and go back and look at the EFPs in silver, it gets even bigger. So we're basically having double this demand in silver if you add the COMEX deliveries and the EFPs over to the London market. So still very, very healthy deliveries. I'm going to stop the screen share there and see if we have anybody asking questions. I've gone over the physical deliveries. We'll get into the producer price index and inflation here in just a moment. And let's see what you guys have in the chat. See if we have any questions. Let's make Jeff Curie puke again. I agree with you. Fat Vegan, thank you for the $5 donation. His comment or question is, freedom is not free. We will all hang by the one, or we'll all stand together. That's right. That's the motto, basically, the founding fathers. They knew to get out of British rule, they had to go all in. They had to give up their lives and their livelihoods and everything. So thank you, Fat Vegan, for the comment. I do agree with you there. Let's all form a strong community. I'm still looking for questions, guys. Pop them down while I'm in the answer the question segments of the video. I'm seeing lots of comments. Love the comments. Smashy baby says third world trillionaire. I agree with you. Sorry, some of the sheets were blurry. I'm doing my best. Rob, do you have any videos available for newbies? I hope you're experiencing an influx of viewers because of Wall Street Silver. And a lot of people I bring to the table need a one-on-one class. Patrick Davidson. Well, Patrick, now that you comment on that, I'm going to show you where you can get the one-on-one stuff. It's actually on my website, and we're going to go to learn. So let me go back and share screen on this. All right, on my website, if you're interested in 101 stuff, there's a lot of ways you can get it. Thank you for the question. I do offer a paid subscription on my website. The reason is because I, over the years, have put so much time, thousands of hours into this research, writing a book and doing articles and providing content, that I wanted to put a course together. So if you click all the way up here on the Learn tab and you're a subscriber, you will get this university course. It takes you A to Z in finance and money. It takes you A to Z in economics and markets. It gives you a bunch of stuff on legal that you really want to pay attention to. And I'll be adding more to this as we go on. I've got an A to Z course on precious metals, including the stocks, the metals, derivatives, all that stuff. I've got some stuff on real estate because for 18 years, I ran 2 real estate companies here in North Texas. And I understand real estate pretty well. And it could be a good investment. When's it a good investment? When it's not. And some stuff on future prep, which you should consider if you're worried about a collapse of the currency. I've got a nice interview from a survivor of the Argentina collapse down here. 2 parts of it, actually, 2 interviews. And I've got a long course on prepping if you're interested in that, because I know I have a lot of preppers in my audience. If you're interested in becoming a subscriber, you get this. You get a copy of my book. You get a precious metals planner, which is a gigantic calculator, which helps you plan how much precious metals you need, unique to your own situation. And you will get as well the Golden Quarterly newsletter. We're going to go down here to the quarterlies. In late January, I did my annual stock mining review. Next week on the 16th, I'll be releasing my spring quarterly. This happens 4 times a year. So if you're a subscriber to the website, you'll get 4 of these per year. And I'm going to go back over the mining stocks. I'm going to add a few. I'm going to update the ones I looked at. And then I also have a State of the Union address too. So you get those 2 parts in the Golden Quarterly. That, That gives you the newbie stuff, the one-on-one stuff, and that gives you the advanced stuff and what we're seeing in the economy as well. All of that's included with the subscription. Thank you so much for asking, and thank you for the opportunity to share that with you guys. All right, now let me get control of my meeting controls here. I'm going to go into producer price indexes. So one of my subscribers, Cool Breeze, thank you so much, Cool Breeze, sent me something over Telegram on the phone about increase in what we're seeing in producer price index and energy prices. So I'm going to show that chart he sent to you here in a moment, but I wanted to go over the BLS's news release. The reason is because I want to show you guys how to go here, how to find it. Go to the BLS's website, find the updates every month, and this will tell you when we have oncoming inflation. So it's not a mystery. You'll know when we have oncoming inflation because you're going to see it in this report, producer price indexes. What is producer price index? Producer price indexes is what producers are basically paying their costs to get their production out, which means if it's going up, your prices are going to go up. That's price inflation. So we talk about monetary inflation, or what the classical term for inflation is inflation in the money supply. Then you have inflation in prices. And producer price index is one of the basically two measures you can use to track when you're going to have oncoming inflation. So there's another one. I'll get to that in another video. Here in chart 1 is 1 month percent changes and selected producer price index, final demand index prices seasonally adjusted. So you see here that final demanded goods is up quite a bit. You see a nice little spike up basically since December. Actually, I would go back to November. We had a little bit of tail off in November, and then prices have gone steadily up since then. The bigger one to look at is the 12-month percent changes, because this will give you year over year how prices are increasing. You have over 6% final demanded goods. Final demanded service, not quite so much. So the goods that you buy every day, the hard things, are going at 6%. Now consider the fact that a lot of this comes from overseas, because remember, we don't manufacture most of the stuff we look at, not the hard goods. We're mostly a service-based economy. So our services are going up, but it's around between 2 and 3%. It's not quite as high. The actual hard goods are going up, which means what happens is overseas where they're making stuff, they're seeing price inflation before we see it. We'll see it because we're the end consumers of a lot of the world's goods. And so will Europe, by the way. We'll start to see it in what we pay for stuff. That's price inflation. I also wanted to show you a little table A chart here. Monthly and 12-month percent changes in selected final demand price indexes. You'll see here that energy is the big one. If you go to final demanded goods here and you go down to this column, which is energy, you can see in February, well, it's been strong since December. 4.7% increase in December, 5.1% increase in January, 6% in February, and 5.9% in March. Energy is driving the upward cost of prices, and energy goes into making all goods and services. So energy is one of those things where you just don't pay at the gas pump or in your utility bill. You pay it in everything else because it takes manufacturers energy to run their operations. It takes hotels energy to run their services. It's taking me energy to run this live stream. Okay, so energy affects everything. That's going to raise the price of everything, whether it be goods or services. And in heavy manufacturing processes, which use a lot of energy, like producing a car, for example, you're going to see rampant price increases. So energy is like the canary in the coal mine from a PPI index perspective. It really tells you when everything is going to go up. And we're starting to see that spike the last 4 months. So that is signaling oncoming inflation. Now to Cool Breeze's chart, he sent this to me over Telegram. This is JP Morgan Global PMI Prices Index. It's a little bit different measure of prices, but it shows you the PMI input costs, what we're paying overall. That has spiked up since 2020, the end of the year. So here, basically, if we go 2020, we had the crash, then we had the V-shaped recovery, if you will, during 2020. And then 2021, it has spiked up a lot. So it's not only the recovery to where we were before the pandemic, it's the recovery we've had after, which has been the bigger price increase. So that tells you not that we're just going to get back to where we were pre-2020 price levels. We're going to blow way past. That's this part. This is the way past pre-pandemic level prices that you're going to see transmitted from the producers into the economy. And we haven't seen it yet. The global consumer price index actually has fallen a little bit. So we haven't seen that yet. But where producers, the input costs are coming into their products, into their services, it's going to be transmitted back out. So this gray line here, the actual global consumer price index has to go up, or If it doesn't go up, that means that somebody's lying, i.e. all of the governments, about what we're actually seeing in terms of inflation, which I've said about 100 times. If you're a subscriber and you go to my website and you go and read a copy of the book, actually, I just went off the page I want to go to. If you go to Drop Shadow Book and you read the book, chapter 2 of my book here, which you get a free copy when you subscribe to the website. Chapter 2 of my book has 50 pages on government statistics, and I break them down. I take all the tables off their website, I compare it to reality, and I show you where the government has been flubbing on their measurements. That's why the CPI is not matching the PMI or the PPI, all these measures of oncoming inflation, but it should. And part of it is they're jacking around with the government numbers. The other part of it is it takes a little bit of time for that to go from producers to consumers. So you have, if you look at 3 steps, first step, government prints a lot of money. Okay. Second step, eventually that works its way into price inputs, into goods and services. Third step, it reaches you. That's how inflation transmits through the economy. And we're seeing this very stark. We saw the recovery to pre-pandemic levels, but this piece right here is what's telling you it's going way past that. That's oncoming inflation. That's why you want to own your gold and your silver, because it's going to defend you against that oncoming price inflation. And remember, on my website, I talk about this. I have the interview with Fernando Aguirre from Argentina when he actually lived through the currency crisis in 2000. That's in the university. In the book, I talk about all the numbers, and then I give you calculators on the website. That's all the benefits of being a subscriber. Let's go back to the chat here and see what we've got. I'm going to go to my internal view of the chat. Okay, I have credited everybody that has done a super chat. That is Hume, Elad, One-Eyed Rock, and Fat Vegan. Thank you guys so much. I appreciate all of that. Oh, wow. We've got 538 concurrent viewers. This is awesome for a Sunday afternoon. Appreciate you guys. Welcome to all of my international subscribers, and welcome to the people here stateside that are tuning in on your Sunday afternoon. Appreciate you guys who may normally be watching sports, reading your Sunday newspaper, just getting off of church, community activities, spending time with your family, for jumping on. But we want to do this in the afternoon on Sunday to also take care of our overseas guys as well. We definitely appreciate all of you. Appreciate that so much. All right, let's go back to the chat and see what we got. All right. Wow, lots of chat today. I got to catch up to this. Lots of questions back and forth between. Okay, Alex Gomez says, hey, Robert, I'm a student and would like to be a subscriber. Do you have a student discount for your site? Alex, I do not have a designated student discount for my site. However, if you will email me at robert@goldsilverpros.com, we will see what we can do. I do want to help out students. Definitely. I definitely want to help educate. So we'll try to do something for you. In fact, if you make a pretty compelling case, I probably will develop something for you that's a special student discount, because I think it's a really good idea. So just email me at robert@goldsilverpros.com. I'll hand that over to on the back end to our accountant to run some numbers and do something for you there. And then if we end up doing a student discount, which seems like a really good idea to me, we'll publish it on the website. Okay. We'll figure out how to do it. I'll figure out how to do that. Good question, Alex. Thank you for asking. And yes, we do want to attract students. We do want to provide this information to students, because a lot of what you get, and this is a comment one of the employees in my business got frustrated with. She's like, you don't learn about financial education in high school and college. They just, put money in stocks. That's all they teach you. They don't really teach you the financial education. So I know as a student, you're not getting this type of good stuff, unfortunately, even if you're in finance, because I took finance classes in my bachelor's. I never got this kind of stuff. I got how to calculate corporate rates of return. It was all about supporting corporates. It wasn't about the economy. It wasn't about personal finance. It wasn't about, all this kind of stuff. So yeah, we do definitely want to edify our students and help out our students. So definitely email me, robert@goldsilverpros.com, and I'll see what I can do for you there. All right. M. Kelsey says, take out a loan for silver. I can't answer that question for you. It's an individual situation. Some people will do credit cards. Some people will take out personal loans. I'm not advocating any of that. I never advocate getting in debt to buy precious metals or to make any investment. I would never do that. I would actually advocate getting out of some debt so it frees up your monthly cash flow. And it's interesting you mentioned that, M. Kelsey, because if you become a subscriber on the website and go to my calculators, it tells you how much free income flow you have and what your net worth is. And sometimes it says don't buy precious metals or any investment right now. It may be a better idea to consider paying down some debt first take your free cash flow, pay down some debt. That may be the best situation for you. And there's sort of a threshold I put in there, but it's very personal to every person. It depends on how much money you make, what your free cash flow is. So if you become a paid subscriber on the website, I've got that calculator there, and it will help you to make that decision on a personal level for you, or at least give you the information you need to make that decision. All right, let's see what else people have here. I'm scrolling back. Gold, silver, pros, that's a big divergence there in 2021. Nicholas Nasty, who was talking about the difference between the CPI and the producer price indexes. I agree with you, it is. What else you guys have? Thank you for all the support. I got tons of support in the chat. Appreciate that. Beverly Smith says, is U.S. going to be Lebanon, Venezuela, Weimar Republic? I think at some point in time, Beverly, we're going to hit that fiat currency failure. 100% of fiat currencies in the world over history have failed. There are a lot of things that have to happen. If you go back to one of my last videos when I interviewed James Anderson, I asked him that question, and he said the fiat currency will fail when the system wants it to fail and they want to go to cryptos. I 100% agree with that. And I 100% agree with them. They're not quite ready there. So you have some time, but I do think it's going to happen. They're going to let the fiat currencies hyperinflate. They're going to try to move this into digital. It's not only a new currency regime, it's a control schema, and it fits into their technocracy and their plans for expanding the economy out into space and things like that. I've talked about that a lot. I won't get into all that here, but yes, I think we eventually will go that way. And I think they'll have their solution ready, which is going to be the state-owned Fed coins and cryptos. Go back to my previous videos. We talk a lot about that. Go look at my video history, and I've got a lot there for you. And in the upcoming quarterly newsletter from paid subscribers, I'm going to touch on that as well, and that will come out next week. So pay attention to that. And let's see what else you guys got. Will premiums go higher, says Dan Longano? It depends on shortages. We've had this question on my channel recently. Are the retailers basically price gouging or scalping? And I've had two people on the channel, Andy Scheckman from Miles Franklin and James Anderson from SD Bullion. They said wholesalers are making most of it. And is it scalping? It could be, but it's also due to shortages. The retailers typically don't make as much, although they're making a healthy amount now. Could they go higher? Sure. If we actually have a run of physical silver, what will happen is the fake spot price, which I talked about, is calculated from the basically confluence of the London fixes and the futures trade on COMEX. That false price, they're going to try to keep it down while the physical demand is going up so much that to get physical is going to go high. And really what that is it's really telling you what the precious metals should be valued at, but it's that false system. So a lot of people get angry and say the premiums are high, the premiums are high. I don't even call it the premiums are high. I think what happens is that's a measure of the falseness in the system. It's the falseness because we don't have a true free market. And it allows us actually to buy silver a little bit cheaper than it would be otherwise. In fact, quite a bit cheaper. And yes, some people are making money along the way because the wholesalers can pick it up, at around spot or a little bit less, and they're buying in volume, and they'll make a healthy profit, and then the dealers will make a healthy profit. But a lot of that has to do with the falsification of the markets in COMEX and LBA and their control of the price and keeping that price down. And then actually, at least for the short term, provides us an opportunity to pick it up cheaper. All right, guys, you guys are doing awesome. We're now up to 551 concurrent viewers. Great for Sunday afternoon. Oh, I wanted to mention to you guys, make sure that you hit the subscribe button and make sure that you go to my website and subscribe also. I'll explain why here in a moment. Let's go back to the website. If you go up here and click on this little newsletter button on my website, there is a free notification service. This is a paid subscription. It's the free notification. Put your email in here. I don't ask anything else. You can use a burner email if you want. I don't care. It's up to you. I'm not asking for any personal information. Put an email into here, hit agree and subscribe. Why? Because you're going to get a notification when we do one of these, whether it be a live stream or an upcoming video. We'll usually do it before the video. Sometimes we'll run the video and do it after. We're playing around with what works the best, but that will tell you when new content comes out. Because if you don't, a lot of time YouTube will not notify you. So a lot of times if you don't subscribe here on my website where we control notifications, you'll go to YouTube and you won't get the notification. And so we may have a video out, you may not be able to participate in a live chat or participate in the premiere chat. And there's not much I can do about that. I can't control what YouTube does. Sometimes their system I think is just broken. So we want to encourage you to go to our website, put in your email address, any email address you want that you're going to check and see for notifications. And then we'll send you out something when we have content, either right before or usually, you know, a day or so after, so you can go back and look at that and participate. Because a lot of times the notifications on YouTube aren't working, and that helps us to have a bigger growing community, which I know you guys like because you like to come in the chat. So we're going to scroll down to the end of the chat. Support your local coin dealers. I agree with you. Only 400 likes needed, says Fat Vegan. Thank you, Fat, for supporting me. May Nguyen says, I just bought a tube of ASE at $9 premium. Yes, you did, sir. But congrats to you, because you know what? I still think it's cheap. Will the Mint become the only place to buy coinage in the future, says John Bethea. It could be, but I think there are private mints. Oh, you guys have got to stay tuned. I'm working out a deal, and I cannot release any details because I signed an NDA. All I can say is this: I'm working out a deal where I may be able to bring you Gold Silver Pros printed silver straight from a mint, straight from a mine, cutting out the wholesalers on the website, and maybe that will bring you some additional supply of silver and bring it to you more cheaply. Stay tuned to that. That's going to take a little while to work out, but I personally am trying to strike a deal to get freshly minted or freshly mined silver into a mint at a cheaper price, cutting out the wholesalers, direct to you on my website. And I've also got a couple of dealers in the US, big name dealers, if I told you who they were, that may be offering that on their website as well. Now, we haven't worked out all the details. I can't tell you anything right now, but I'm doing my best to connect the miners, the refiners, and the distribution channel, cutting out the wholesalers and giving you guys a deal on silver. Of course, I'll take a little bit of that, but I'm not going to take much. I'm going to be very modest with the percentage that I take. It will help out the channel, and hopefully it will bring you more supplies of silver a little bit cheaper. I cannot give you any more details than that, but stay tuned. We're working on the details. I've got both ends of the deal done. We just got to work out the logistics and sign all the paperwork. So it's coming. Trust me, it's coming. So stay tuned. We'll make that announcement. And again, the place I'm going to make that announcement is where I make all my announcements. You got to be here. If you want to be the first to see that announcement, you got to be here on the free newsletter option where you get the notifications. I'm going to notify people there first because I want people on the website. Because on the website, you get all the free stuff I do here, plus you can subscribe, but you can also get these notifications where I can't control whether YouTube notifies you. And that's going to include the deal of silver. I'm working that deal out. I'll let you know when that has been solidified. Give me some time to work that out. All right. Let's see what else we got up here. I saw a question. Let's see if I can get back up to something about did COMEX rob? Hume says 2,500, 3,000 tons of gold produced each year. How much goes to London and the COMEX? How long can London support the futures market? I don't know. There's a lot that goes through London because a lot of it goes to refineries in Switzerland. Then it comes out to the various markets. It goes to all markets. It goes to China. You know, it goes to a bunch of markets like the LBMA, COMEX, Dubai, everywhere. I don't have the actual counts, although there is a chart on Gold Charts R Us that talks about that. Maybe in another video. That's perfect. What I'll do is I'll go research the data and I'll bring it to you on terms of worldwide gold movement on another video. I won't have time to do it today, but let me put my information together and we'll do that maybe next week. Remind me next week, Hume, and send me an email, Robert Gold Silver Pros, and I'll include that next week, at least as much data as I can find. How does inflation affect loan balance? M. Kelsey, I'm not exactly sure what you're talking about there. How does inflation affect the loan balance? But if you're talking about how does inflation affect debt, well, if you inflate the money supply, it allows you to pay existing debt off with cheaper debt, and loan holders don't like that because we talked about before bond rates will rise, yield will rise, and it makes their currently held bonds less valuable. So generally they don't like it, but that's the way of the world. That's what they're going to do because you got too much debt. So inflation is going to be the way to cure that debt. They're going to inflate their way out of it. I hope that answers your question, by the way. Let's see what else we got. Ninth Judge says, hit the like button. Man, you did that really nice with a little bit of text art. Thanks for doing that in the chat. Appreciate you, guy. When did Bill Gates sell his stock? I don't know. Can't answer that question for you, Micah. Sorry. What is in Fort Knox, says IL Prepper. Good question. We haven't had an audit in 70 years. Nobody knows. Nobody knows. There's been no audit. And if there was an audit, I may question it anyway because I'm a former auditor and I don't know that I trust the government's audits. But when you don't have an audit in 70 years, nobody knows. I don't care who is saying it unless you're a guard there. But even if you're a guard there, you don't know how much of that gold has been rehypothecated from somewhere else. So even if it's sitting there, you don't know if we actually own it in Fort Knox. So that's like the impossible question. Honestly, it's the impossible question. Nobody knows. Let's see what else we got, guys. I think we're going to end it up here in a few more minutes, but I want to see if I can get to a few more questions. I'm going to scroll down to the bottom. Did COMEX rob the mint, all of the mint around the world? Is that why the premium is so high? I don't think the COMEX robbed the mint. I do, because the mint is responsible for printing like silver coins and bars, whatever they're selling. I do think that some of the governments have sold out of their governmentally held bullion. Either they leased or they sold it, and they're never getting it back because a lot of it went to China. A lot of it got remelted. A lot of it's rehypothecated into funds, and some may even rehypothecate and come back to the mints and they remint it and it's gone. I mean, I don't know, because gold can go any which way you want. I do know that. Did they rob it? I don't know if rob's the right word. I would say gave away very easily through lease contracts in which they stupidly think they could get some of it back, and it's probably never coming back, because once you remelt it and change serial numbers, guess what? Or you remint it into a new form, guess what? You can't track it. You cannot track it. Ukbay Nguyen, $5 donation. Thank you so much. He says, is the taxi cab economy, will the taxi cab economy affect inflation? Yes, because taxi cab economy that I talked about in my last live stream, I think I did this Tuesday morning last week because I was in Vegas, didn't do it Sunday afternoon. I was hanging out with my good friend, Chris Marcus from Arcadia Economics, taking a little bit of breather, having a little bit of a break. So we did it Tuesday morning. It was called the taxi cab economy. That was that version of Cowboy Metals. And I talked about how the taxi cabbers and the Uber drivers and Lyft drivers weren't working in Vegas. They got their stimmy checks. They were staying home playing video games, according to several people I talked to, including one guy that was doing Uber and one guy that was taxi cab. And like, all our friends don't want to work. They got the free money and they're getting unemployment on top of that. So they don't want to come out and work. And the people that were out working were making a ton, because when I got into an Uber, what normally would have been a $12 Uber ride, because it would show it right there in the Uber screen, the guy would charge me $25 in cash. And he would just sit there and wait for people. And he'd wave to you and say, hey, I'm an Uber driver. And you're like, well, I'm not finding Uber drivers. Like, I know, I'll take you. And you get in the cab and he would charge 25. It's double the price, because he could demand it, because people were waiting 30 minutes, an hour, sometimes even longer. A lot of times I was just walking up and down the strip in 90-degree heat because I couldn't find anybody. So that's inflation of prices. Why? Because when the government pays people to stay home, you have less people working, so that there's more demand and less supply. That raises the price. Is that eventually going to transmit everywhere in the economy if the government keeps doing this and works its way to UBI, or universal basic income? Hell yeah. At the same time that they're, doing all this money printing. Yes, it will eventually transmit. And that's why I did the taxi cab economy, to show you what happens when that happens and what's going to happen later on when that starts to transmit across the rest of the economy. It was a great anecdote being out there in Vegas and seeing that. And that's why I shared it with you guys. All right. What else do we got? How risky is it that First Majestic does business in Mexico? Anders A. I get this question all the time. Mexico is one of the premier silver districts in the world. Peru is another. There are other ones. Mexico is the closest premier silver district to us here in the States. I don't think Mexico wants to run out all of its miners, but I do think Mexico is in some sort of financial trouble, and it also sees the opportunity in silver and gold and all of its other resources. You got copper, lead, zinc, all that kind of stuff out there too. Got some oil, got some other things. They're not going to let it go for free. And I think we saw it in Indonesia with the Freeport-McMoRan deal, how they've changed their contract, and we want Freeport-McMoRan to give them a bigger cut of the pie and also train the Indonesians how to mine. Mexico could do the same thing. It's going to get more costly to work there. I don't think they're going to choke First Majestic. And to be honest with you, with where silver prices could go, I think First Majestic, Impact Silver, Reyna, Mag, all those guys, Silvercrest, all those guys that do business down in Mexico are still going to make a killing. I don't think it's going to kill it, but I do think Mexico's wanting to take more of their cut. I think that's coming. I think you saw it in Indonesia. You see it in some other countries. I think that's coming to Mexico. That to me is not a reason not to invest in Mexico. That tells me that the Mexican government sees a boom coming. And so that may be a reason to invest more into Mexican miners, because I don't think they're going to nationalize it. If they nationalize it, they're going to kill the industry, and that kills the revenues, and they'd be stupid to do it. And if they did, it would collapse and they would stop the nationalization. So I'm not worried to that extent. I do think it could raise costs some, but there's going to be so much room for money in silver when this thing pops. I'm not all that concerned. And in fact, right now with silver anywhere above 20 bucks, pretty much all of the major miners in Mexico are making money hand over fist anyway. So if the government takes a little bit of that cut in whatever scheme they come up with, So what? Still going to make money. Still positive for the bottom line. So from my standpoint, I'm not worried about an overt nationalization or one even lasting that long, because it would be disastrous. And I'm not worried about, you know, the political risk in Mexico. Even the more socialist government that Mexico's had recently, all the miners I talked to down there, they realize how important mining is to Mexican economy. They're not going to screw with it too much. They're just not. They're not stupid. You know, even the socialists down there that are running Mexico are not stupid. And they've come out publicly, that Mexican government, saying, hey, we're going to support our miners. Now they're going to change some things. They may go for some more green initiatives. They may require a little bit more in taxes. They may change how they approve the permits, but they're not going to stop it. It would be stupid for them to do it. It's a major market. They're not going to do it. All right, let's see what else we got. What state is not a mafia state, says Nicholas Nasty. I'm going to leave that for the comments. Good question. All right, last question from Fat, and thank you so much, Fat, for the donation earlier. I have heard that silver will be labeled as strategic metal at 75 US currency. Hey, Fat, I don't know where you heard that, specifically the price point, but I do think it will be labeled strategic material around the world, because some things in some ways can substitute for silver, but not anything in all the ways. And most things, and not more than one of the benefits that silver has. Silver is one of those super unique metals that, it, like gold, it can be used as money, because it meets Aristotle's 5 measurements of sound money: fungibility, divisibility, so on and so forth. It can't be really destroyed. It can be reburied, can't be destroyed really. And all the other ones. Go look up Aristotle's measurements of money. But it's got so many powerful factors. And antimicrobial, one of the best conductors. The way that it can be melded, its malleability, all those things. That the only thing that comes super close is gold, but gold's so much more expensive because it's so much harder to find, that silver really doesn't have direct competitors in a lot of spaces. Now you can in some way substitute for it. Like you can use gold, but it's a lot more expensive, or you can use aluminum or copper, but it doesn't have all of the same features. And so silver will be a strategic metal. It is a strategic metal for the technocratic systems and the technology being set up in the what I think is going to end up being a new space age economy. And as we push out to space, it's going to be strategic. I don't think you can do that without silver, at least not right now. No, not would have been identified technology right now. So I think it could be named strategic metal. I don't know about $75 now, so we'll have to see, but good comment. All right. I think this is going to do it, guys. We've had an awesome chat today. We have had an absolutely awesome presentation. Have given you guys good information. To recap, we went back over what's happened in the COMEX. We went back over what's happened from the COMEX demand moving over to London, which signifies we have shortages. We've gone back over what has happened with the actual price charts, the technical charts. We talked previously about how silver has been coming off the COMEX, both registered and eligible. So people are taking physical possession, which signifies silver has become so important. They're not even leaving it in the warehouses, whether it be COMEX or other. That's key to silver and how much demand there is in silver. We talked about, what else did we talk about? Let me go back over all the things that we looked at. We talked about how much silver has been delivered. We talked about oncoming inflation, both in terms of the PPI, the producer price index, and the chart that my good buddy Cool Breeze sent to me, the JP Morgan Global PMI input costs. We talked about all those things. And I think we've had a really good presentation. Guys, remember, we're on Twitter. Subscribe to us on Twitter, goldsilver_pros. Subscribe to us on YouTube. Hit that subscribe button and that notification button. And don't forget, go to the website, click on the newsletter button and subscribe there as well. Where you may not get a YouTube notification, you will get it from us on the website when we have new content. And we want you guys to get that content because we absolutely love to see you here in the chat. We peaked at around 560 concurrent viewers. We're now at 530. Got a great chat rate, a lot of views on this one. Thank you guys so much. Almost $60 in chat revenue. Thank you for the generosity of the chatters in the channel for giving that $60. That helps the production quality. It helps us to have the digital camera and all the things that we have, and helps for me to have time to bring you the best research. And don't forget, you can subscribe on our website if you want to become a paid subscriber and get even deeper. We get even more, and we'll go over our mining stocks and all of that goodness as well. I think this is going to do it, guys. Thank you so much. Appreciate you spending your Sunday afternoon with me. Again, UK, Europe, and Asia Appreciation Day every Sunday right here, 1 p.m. Central Time. Cowboy Metals broadcasting from Texas. Thank you so much. This has been Rob Keats from Gold Silver Pros. Com. See you next time.